Good morning. Welcome to Stock Market Today. It's Monday, January 6th, 2020. I am your host, Dan Russo, the Chief Market Strategist at Chaikin Analytics. You can find me on Twitter. I'm at Dan Russo _ CMT. Stock Market Today brought to you today and every day by Chaikin Analytics. Head over to chaikinanalytics.com/today. Sign up for a free email where we get a lot of the content for this show, as well as give you daily stock ideas to consider. Hits your inbox every trading day before the market opens. So U.S. equities closed lower in Friday's trading, ending near the worst levels of the day following the news of attacks in Iran. Most sectors were lower. Materials, financial, and consumer discretionary, the big underperformers, REITs and utilities, were the only sectors to finish higher on the day. Energy also outperformed with strength in crude oil. Treasuries were stronger with the curve flattening. The dollar was stronger against the euro, but down on the risk-sensitive yen cross. Safe haven buying took gold higher by 1.6%. WTI crude settled up 3% to end at the highest level since March. And as we get to the desk this morning, futures are down 50 basis points after that closed lower on Friday. It was actually the S&P's biggest decline since early December. Asian markets were mostly weaker overnight, with Japan and South Korea underperforming. Mainland China and Australia kind of mixed. European markets are under pressure this morning. Treasuries are unchanged to a bit weaker. The dollar is weaker against the euro, but flat on the yen. Gold is up 1.8%. WTI crude is adding on, up 1.2% after that 3% rally on Friday. As we look at the structure of the S&P 500, equities pull back as tensions rise in the Middle East. That's to be expected. We're watching near-term support in the 3150 to 3200 range. We're happy to carve out resistance, or say that there's resistance around the 3250 level as it stands right now. The RSI exits overbought conditions, but is still holding within bullish ranges. Chaikin money flow is bullish as well. So the indicators are still in line with the price trend. Right now, obviously, there's news, there's geopolitical tensions, right? But let's honor price and let's look at our levels. So far, we are holding above the key support levels that we've been highlighting. And so far, momentum remains with the trend. Right, so what we're looking for now is for this near-term support to hold and for the RSI to hold within bullish ranges. That would be an indication that the trend is likely going to continue to the upside. Obviously, there's going to be some day-to-day news flow and risks that could increase volatility here. But let's break it down, take a step back, and have a plan. I think your plan is this. If the market pulls back into the support zone and the RSI holds bullish ranges, that would be a clue that you want to probably get more aggressive on the long side of the portfolio. Honor your stops, manage risk, focus on leading stocks and leading areas of the market, and manage your risk. That's the strategy, and that's what we're going to go with for now. Market in a minute. What are we writing about in the note today to Chaikin Analytics clients? Well, tensions in the Middle East weigh on risk assets. Investors seek havens. Here's what we're talking about a little bit as well. By our work, our overbought, oversold indicator for the major market ETFs, they're not oversold yet. We were highlighting to clients over the weekend that we want to wait for oversold conditions while the market holds those key support levels before becoming aggressive. Commodities, on the other hand, have rallied as the dollar has weakened. Healthcare services could provide shelter here in the market, kind of disconnected from what's going on from a geopolitical standpoint. And as I said, futures do point to a lower open today. Looking at the power bars, obviously they all weakened over the course of the day on Friday. The Dow was down 83 basis points, 5 bulls to 4 bears there. S&P 500 down 74 basis points, 112 bulls to 60 bears. NASDAQ was a bit of an underperformer, down 92 basis points, 123 bulls to 11 bears for the NASDAQ. Some relative outperformance, actually, on the part of small caps, only down 40 basis points when the main market was down close to 75. 702 bulls to 244 bears for the small cap ETF. Bonds, strong rally, safe haven bid taking them higher. According to the Chaikin Power Bar, small cap stocks and large cap stocks remain bullish, but the major markets across the board are mixed. Let's hit our stock of the day. FC Stone, INTL FC Stone. From the Capital Markets Group, closed at 48, 44 on Friday, down 27 basis points, which was relative outperformance on the day. Has a very bullish Chaikin power gauge rating due to attractive financial metrics, very strong price volume activity, as well as positive expert activity. 20 factors, when we take them in conjunction, 5 in each of these 4 categories, give us this very bullish rating for a stock that's in a strong trend above the rising long-term trend line and a strong industry group. Capital markets has been a strong group. We've highlighted it here and in our notes to Chaikin Analytics clients of late. So what do we have? We have a bullish stock outperforming the market with bullish money flow. The only real concern that I have is that we're not oversold yet. And in this market environment with some volatility, I don't think you need to be a hero out there. I think you want to wait for prime setups. I think what you're looking for here is for INTL to become oversold while holding above the 46 to 46 area, $45 to $46 area that was the breakout through resistance. Should that be the case, I think this sets up as a very compelling opportunity. I want you to add INTL to a bullish watch list and monitor it. The stock becomes oversold, it becomes a compelling name on the long side of the portfolio, especially if those key support zones for the market continue to hold as well. Let's look at our sector tracker now, the movement of the major sectors over the last 5 days. Industrials have come on strong of late at the top of the list. Technology, biggest weight in the S&P 500, also rallying and outperforming the market over the last 5 days. Real estate rounds out the group of 3 that are higher over the last 5 days. Financials, discretionary, comms, and utilities are kind of middle of the road, but all lower over the past 5 days of trading. Staples, healthcare, energy, and materials, bottom of the list. I would expect to see energy moving up. Energy stocks have been much less bad of late, right? The stocks themselves. Remember, we were very bearish on the group. Still bearish from a fundamental standpoint, but I don't think the bearish side of the coin is as easy as a trade as it has been in the past. There's a subtle shift taking place within the energy complex. Materials were the worst performing group on Friday. I would watch the safe havens here in the next couple of days, the REITs and the utilities and staples as well. And speaking of REITs, it's our industry in focus today. The Dow Jones REIT Services ETF, 22 bullish stocks for 21 bearish stocks, earns it a rank of number 15 of 21 subsectors. It's moved up 1 slot over the past week, but over the past 6 months, this group has been an underperformer, lagging the S&P 500 by 7.3%. I mean, power bar ratio, yes, is skewed in favor of the bulls. I would call it neutral at best, right? We're going to take a look at what a mixed picture we have here a little bit later on in the show. But names that potentially look interesting or where you should maybe do more work: Ashford Hospitality, AHT, CorePoint Lodging, CPLG, and RLJ Lodging Trust, RLJ, all have very bullish Chaikin power gauge ratings. But let's look at the group here, right? The group itself has a bearish ETF rating. RWR, the REIT that we track, the REIT ETF that we're tracking here, bearish ETF rating and a weak trend below a declining long-term trend line, working towards an overbought condition. So what do we have here? We have a bearish fund underperforming the market. Been mixed bag, but mostly bearish money flow of late, working towards an overbought condition. REITs just aren't that compelling to me. They may catch a bit of a safe haven bid here in the near term, right, with geopolitical risks in the market. Investors gravitate towards the yield areas of the equity market, REITs and utilities, but by our work, not an area where we want to be focused. Let's look at what's trending now. Yesterday's S&P 500 movers and shakers, our gainers and losers. Friday's movers and shakers. LW, one of the few names reporting earnings last week, and their report took their stock higher on Friday by 11.26%. L Brands caught an upgrade, which sent that stock higher by 7.75%. NOC with a bullish rating and Lockheed Martin LMT with a neutral rating. Defense stocks were strong on Friday with rising geopolitical and military risks in the Middle East. Concho CXO catches a buy, an initiation, a buy today, but the oil, the energy stocks and the oil leveraged stocks did trade well on Friday, but not the refiners. Let's look at the loser side of the board. First, let's touch on INCY, INCY. INCY down 9.4% following results of one of their drug trials. Holly Frontier, HFC, and MPC, Marathon Petroleum, as oil prices have been rising. The refining names have come under pressure. Holly Frontier down 6.25%. MPC down nearly 6% with that spike in oil. Oil also impacting the airline stocks. American Airline down nearly 5% on the day. Notice the bearish ratings for MPC and American Airlines. IT services names have come under pressure this week or to start 2020. DXC, part of that group. Nothing company specific, but the stock was down 4.16% on the day on Friday. Notice the bullish rating. Maybe there's a setup there. Let's look at what we're writing about in our note today. It's Monday. We look across asset classes of everything that's happening and what it could mean for equity markets, right? So first, commodities have broken out. Remember, we started talking about commodities last week. Here's the DBC, the Invesco DB Commodity Index Tracking Fund, has broken topside from this consolidation. Low at 14.40, high at 16.10. So you got about $1.60, $1.70 of upside potential here on this breakout. Gold and oil have been leading the commodity complex higher. Fund is above its 200-day moving average as the RSI shifts to bullish ranges. Take a look here now at, on a relative basis, the downtrend remains in place, but maybe becoming less bad as we move into the end of 2019 and early part of 2020. Don't have an upside breakout yet for commodities relative to equities, but it's something we are watching closely because we have upside momentum. We have a breakout. Stage could be set for commodities to see an improvement in relative strength. It's an area it's an asset class that I've been watching closely of late. I think we want to pay attention to it. We've been bullish on gold. We remain bullish on gold. Oil's starting to perk up. We'll see if that starts to trickle through to the oil stocks from a fundamental standpoint, right? At the very least, if we look at XLE and some of the energy-levered ETFs, the downtrend seems to have been halted. We've gone into a consolidation. The question now is are we going to break topside, and are the fundamentals going to start to improve? If we see that happen, we'll start to warm up to energy names. Right now, what I can say about energy is it's just less bad from a trend perspective. It's not as easy as a short as it had been throughout much of 2019. To me, I want to give that one some time to play out. And the commodity strength has happened as the dollar has weakened. All right, here we're looking at the U.S. dollar index. It's a cash-settled index. It's against the U.S. dollar against a basket of other currencies, predominantly weighted towards the euro. But what we can see here is that we went from a steady uptrend to a consolidation, and now we're starting to see distribution, and we're rolling over. 50-day moving average on the verge of crossing below the 200-day moving average as the RSI shifts into bearish ranges. Notice how it's become oversold. Rally attempts can't get much above 50. Momentum shifting to bearish ranges for the dollar as the trend potentially shifts from bullish to bearish. What does that mean? Well, commodities are priced in dollars globally. As the dollar weakens, commodities strengthen. As commodities strengthen, we can look to see if there's a follow-through, should be following this now, if there's a follow-through into the equity market. This is why we look across asset classes. Why do we pay attention to the dollar if we're predominantly focused on equities? Well, because what the dollar does could have an impact on equities if we run through the line. That's why we're paying attention to it. Dollar looks like the path of least resistance for now is lower. Dollar likely to continue lower. Likely adds a tailwind to the commodity complex. One of the areas that we've been bullish on is gold, and we continue to be bullish on gold. Now, looking at individual stocks, with volatility picking up and largely a function of geopolitical risks overseas, I wanted to highlight an area of the market that could be somewhat insulated from that, and I think that healthcare services here in the U.S. is. XHS, breakout. Consolidation, but holding above the breakout level as the fund trades above the rising 200-day moving average. Momentum appears to have shifted into bullish ranges, and on a relative basis, we've had a topside breakout, and we're holding above that breakout level. XHS has a bullish Chaikin Power Gauge ETF rating, 14 bullish or very bullish stocks for 4 bearish or very bearish stocks. Area of the market where I think you want to be focused take a look at some of those 14 stocks that have bullish or very bullish rating for some potential opportunities here on the long side that are less exposed to the geopolitical tensions that are playing out overseas. That's going to wrap it up. Welcome back to the first full week of the new year and the new decade. Thank you for starting your morning with me. Head over to chaikinanalytics.com/today to sign up for the email. I'll be back here with you tomorrow. Have a great Monday, everyone.